What exactly is insurance? Why do people pay for something they might never use? Let's break it down in simple terms. Insurance is a system designed to protect individuals from large, unexpected financial losses. It works through something called risk sharing. Instead of one person bearing the full cost of a crisis, like a car accident, a stolen phone, or a sudden hospital visit, everyone pays a little bit into a pool. When something bad happens to someone in that group, money from the pool is used to cover their costs. Here's how it works, step by step. Step 1. Risk sharing. Imagine 1,000 people agree to each contribute $100 a year into a shared fund. That creates a $100,000 pool of money. Now, statistically, only a small number of people in that group, say 10 or 15, will face a major problem that year. If one person has a car accident that costs $5,000, the money to cover that expense comes from the shared pool. And if another person has a medical emergency that costs $10,000, it comes from the same pool. No one person is carrying the entire burden. That's the power of risk sharing. It makes serious emergencies financially manageable. Step 2. Premiums. The amount you pay to be part of that shared pool is called your premium. You might pay it monthly or annually, depending on the insurance provider and the policy. The size of your premium depends on how much risk you bring into the pool. For example, a teenager who just got their driver's license might pay a higher car insurance premium than someone in their 30s with a decade of safe driving. Why? Because the younger driver statistically has a higher chance of being involved in an accident. The more risk you represent, the more you typically pay. This system lets insurers fairly distribute the cost of coverage across different people. Step 3. Deductibles and payouts. Now, let's say something happens and you need to use your insurance. You'll file what's called a claim, but before the insurance company pays out the full amount, you usually have to pay a deductible. This is a fixed amount that comes out of your pocket first. For example, if your deductible is $500 and your car repair costs $3,000, you pay $500 and the insurance company pays the remaining $2,500. Deductibles help keep premiums affordable and prevent people from making claims for very small costs. It's a way to balance responsibility between you and the insurance provider. Other key concepts: coverage and exclusions. It's also important to know what your insurance does and does not cover. The things your policy pays for are called your coverage, and the things it doesn't pay for are known as exclusions. For example, some health insurance plans may not cover dental work, and some travel insurance might exclude pre-existing conditions. Always read your policy carefully so you understand your protection before you need it. Conclusion. So, to sum it up, insurance is about protection, not just for your finances, but for your peace of mind. You pay a small amount regularly so that if something big and unexpected happens, you're not left facing a huge bill on your own. You're part of a community, all contributing to a safety net that helps when life doesn't go according to plan. Whether it's health, car, renters, or life insurance, understanding how it works helps you make smarter decisions about your future. Insurance isn't a scam or a waste of money, it's a financial tool. And like any tool, it's most powerful when you know how to use it.